Hello, my name is Angela, and I'm here with Kevin. We are here to answer some common first time homebuyer questions, which I know you have. Hi, Kevin. Thank you so much for joining us today. Why don't you introduce yourself?
Hi, I'm Kevin Tucker with Movement Mortgage. I am a licensed loan originator or mortgage loan officer here in Central Oregon, and I've been in the business for about 11 years now.
And my name is Angela Nixon. I am a licensed realtor in Oregon. I serve Central Oregon. So we have a few questions today for first-time home buyers. The first one I have for you is tell us about pre-approvals and why are pre-approvals so important?
Yes, absolutely. Pre-approval is the first step into buying a home, unless you're buying with cash. But most people aren't going to be buying with cash and need to borrow money. The pre-approval process is where you fill out the application with me. I pull your credit. You send me your supporting documents, which is your pay stubs, your taxes, your bank statements, a long list of all your financial statements, basically. I go over everything, make sure it looks good. We talk about what down payment you want to use, what loan program is best for you. And then I say, all right, you qualify to purchase up to X number of dollars with this down payment.
My next question for you is about closing costs. Can you explain what they are and how much a first-time home buyer can expect to pay?
Yeah, closing costs are something a lot of people forget about. Not only do you need a down payment in most scenarios, but you have to keep in mind that there are costs for the loan. There's title costs, there's taxes, there's insurance, there's loan fees. There's a lot of different things to keep in mind. And usually you're looking at anywhere from $5,000 to $12,000 for closing costs, depending on the home. And that closing cost, that number includes your prepaid taxes and insurance. We're going to collect a certain amount of homeowners insurance up front, and we're also going to collect a certain amount of property taxes up front, because those are usually going to be included in your payment. So we have to collect a certain amount to pay those to get those started. So $5,000 to $12,000 is reasonable depending on the home. Some have lower property taxes, some have higher property taxes.
Okay, thank you. My next question for you is about home inspections. Now, there's home inspections and appraisal. So, what are the difference between the two, and why are they important?
Yeah, so it's a great question. Appraisals are for the lender to verify that the home is worth what you're paying for it. So if you're offering $500,000 on it, we're going to send an appraiser out who's going to look at comparable homes, similar homes in the area, similar size that have sold recently, and say, yep, homes like this are selling for this. It is worth $500,000. A home inspection is not required for the loan, but it's very highly recommended because you want to find out if there's any problems with the house, if there's any rot, if there's any pest issues, if there's a leaking roof, if there's faulty wiring, any of those things. That's what the home inspector is going to do for you. And if you do find those issues, you want to talk to your agent about that and see how you want to resolve those issues.
Exactly, because you can have a little bit of leverage when it comes down to home inspections, depending on what comes up. You can request repairs, or you may even have some negotiating power with certain things that are found within the inspection. My next question for you is about down payments. Can you explain what they are and how much first-time home buyers can be expected to pay for a down payment?
Yeah, so down payment, there's a lot of confusion around down payment. A lot of people think you need 20% down to buy a house. That is not required. 20% is a magic number in that if you put 20% down, you don't have to pay mortgage insurance. However, there's a lot of loan programs out there you can pay as little as 3% down on a conventional loan. Some of the government programs like a VA loan or USDA allow for 0% down. So down payment is not as bad as a lot of people think. Talk to me, talk about what you've got, and we can find the best program for your scenario.
Okay, great. Um, my final question for you is about home equity. Can you talk to us a little bit about home equity and how it works for first-time homebuyers?
Yeah, so equity is basically the value you have in your home above what you owe. So for simple math, if the home is worth 500,000 and you borrowed 400,000, you have $100,000 worth of equity. And there's two ways to build equity at that point is first paying down your mortgage. So as you pay your mortgage down, you're going to pay down that loan balance. Second, as the home value goes up, and in Central Oregon, home values are continuing to go up. So you are building equity in your home while you own it. So there's an old saying that the best time to buy a home is 5 years ago. The second best time is today, because you're going to start building equity right away. And you can use that equity for a lot of different things. You can borrow against that for other projects. If you want to do home improvement, if you want to buy an investment property, if you want to buy a vacation home, that is money, that is equity that you can use for other projects.
Great. So it sounds like we like home equity. Can I ask you, Kevin, about some different kinds of loans? The one that sticks out first for me is USDA loans. I feel like that's kind of it's not talked about a lot, and I want to hear more about US.
Yeah, so USDA is U.S. Department of Agriculture, which is basically oversees a lot of food production. But the other thing they do is they help people buy homes in rural areas. Anything is considered rural outside of Bend. So Sun River, Lapine, um, Powell Butte, Redmond are all considered rural, so you can buy with a USDA loan. And USDA, the great thing about USDA is it's a zero down loan. You do not have to have a down payment for that loan. It is a great program to get someone into a home without a lot of cash out of pocket. Plus, as a government loan, it tends to have lower rates than conventional loans. The drawback is there is a funding fee and there is required mortgage insurance that lives with the loan for the life of the loan. So it has some other costs to it, but it gets you into the home and building equity right away, which has tons of value.
Can you tell us a little bit more about a funding?
So funding fee on government loans, the three government loans, FHA, USDA, and VA all have funding fees. And basically that is a fee that they charge up front. They add it to the loan amount. It's not cash out of pocket. So USDA is 1%. So whatever your loan amount is, we're going to add 1% onto the top of your loan. So if you're borrowing $100,000, you're actually going to borrow $101,000. FHA is 1.75. So we add 1.75% onto the top of your loan. And VA, the funding fee varies depending on if you are a disabled veteran or if you have used your veteran loan before or not.
Great. Can you tell us a little bit about FHA?
So FHA, Federal Housing Administration, has a great loan for people who don't have a lot of cash to be able to get into a home. Minimum down payment for them is 3.5%, and they've got pretty good rates. The rates are lower than conventional in most cases. Drawback is that funding fee of 1.75%, and they require required mortgage insurance that stays with the loan for the life of the loan. It does decrease over time, but it never goes completely away until you pay off the loan. But it really is one of the best ways to get somebody into a home without a ton of cash. There's no regional restrictions on it, and there's no income restrictions on it. You have to just make enough money to pay back the loan.
Gotcha. And so if someone were interested in investing, they wouldn't want to use it, or they couldn't use an FHA loan for this investment property. Is that correct?
Correct. So FHA, USDA, and VA, all the government loans are for primary homes. You cannot use them to purchase an investment property or a vacation home.
And can you tell us a little bit more about convention?
So conventional loan is the most common loan out there. Minimum down payment is 3% on that loan for a first-time home buyer. For non-first-time home buyers, you need at least 5%. But you can use it for primary, you can use it for a secondary home, you can use it for investment properties. You can use it for just about anything other than commercial purposes. So it's a great loan that a lot of people use. It fits most people really well. And the mortgage insurance on that, if you put less than 20% down, does go away once your home value goes up compared to your loan. So your loan to value. Once it reaches 78% loan to value, that mortgage insurance will drop off automatically.
Okay. And how about last one? Tell us a little bit more about VA.
So VA loan, Veteran Administration, this is for veterans only or surviving spouses of a veteran. It is a great loan. Zero down, no mortgage insurance. This is the one where you can do zero down and have no mortgage insurance. It is a fantastic loan. Great rates. Their only drawback is there is a funding fee if you are not a disabled veteran. If you have a service-related disability of at least 10%, they waive the funding fee. So it is a fantastic loan for people who are veterans who have served. It's one of the best rates out there, and I am fine with that. I think that's great. Our veterans should get the best rates out there.
Absolutely. So, Kevin, a lot of people are waiting for lower rates. Why would you suggest not waiting for lower rates?
So, great question. So, yes, in the last year, rates have been higher than what we have seen in the last 5 years. For a long time, we had super low rates in the 3%. Those were great. Those were fantastic. Those days are gone. They're not coming back. But a lot of people want to wait for lower rates. Well, the problem is a lot of people are waiting for lower rates. And as soon as the rates drop, all of those people are going to get back into the market. And all of those people are going to be looking at the same number of houses that are available, but it's going to drive prices up. So if you want to wait for lower rates, you can pay 25, 50, 75, $100,000 more for the same home versus buying now. But if you buy now, even with the higher rate, you lock in the price of that home now. Later, we can fix your rate. We can refinance you later once rates drop. So you can lock in the price of the house now. We can fix your rate later. We can't do it the other way.
Hey, do you have any other tips and tricks for first-time home?
So if you're a first-time home buyer or thinking about being a first-time home buyer, start by having a conversation. Start by talking to me. Talk to Angela. Let's figure out where you're at, what your goals are, and we can help guide you as to what you need to do to get where you want to be. You might be more qualified than you think. You might be able to get into a home now and not have to wait a year or two. You may have some credit issues. If that's the case, we can help you with that as well. We can also let you know how much money you need to have saved.
That's a great tip. And I definitely agree that it starts with a conversation, and there's really nothing too scary about us. So please come to us and talk and at least find out what it will take to get you on the track to your first home. Thank you so much for joining us today for our first time homebuyer question and answers. Please let us know if you need any assistance and need some guidance in your next steps to homeownership.